Hello, friends. Welcome to Nirmal Bang. I'm Piyush, and today we are going to be talking about a new upcoming IPO. It is Happy Forgings Limited, and the company is actually very soon going to get listed on the bourses. Joining us on the show today is Mr. Ashish Garg, the managing director of the company. Ashish ji, welcome to the show.
Thank you. Thank you so much, Pish.
So, Ashish, let's understand from the start, basically how has been the legacy of the company, when it started, how the growth journey has been, what sort of difficulties have really sort of placed the company, turned the company into now almost to be becoming a listed company.
Yes. So the journey for Happy Forgings Limited started in 1979. So it was incorporated by my father. I am the second generation entrepreneur in the business. I joined this business in 2006. So it's been 17 years now that I'm in the business. So the incorporation was done with the intention to forge bicycle pedal arms. So we belong to Ludhiana, where major bicycle hub is, where companies like Hero Cycles, Avon Cycles belong. So we started our supplies in the bicycle domain, and since then we have emerged as a second largest supplier of high horsepower diesel engine crankshafts in the country. So we cater to largely to four sectors: to commercial vehicle, off highway, farm equipment, as well as industrials. And
Okay,
yes,
please continue. Please continue.
and largely to these sectors. So we are not in the sector specific industry, and largely the type of customers we cater to are Ashok Leyland, JCB, American Axles, Meritor, Scott's Kubota, Mahindra, and many more.
Okay. And when you're talking about commercial vehicles, is it like you're catering to the entire domain, the three-wheelers, the trucks, the buses, the sort of commercial, the diesel commercial vehicles? Like, is that entire bouquet or some particular subsector?
So we are majorly into heavy commercial vehicles. That includes the buses.
And then also the farm equipments.
Yes, and also the farm equipments. We are a very large supplier in farm equipments, holding more than 50% market share for our products in this sector, catering to
Wow.
some of the customers like Mahindra, Scott's Kubota, Sonalika, Swaraj, Tefe, and
You
more.
you almost covered the top market share. So
Yes.
actually combining all of them, actually it almost comprises of all the top market share. So that's commercial, that's farm equipment. That's very interesting. Um, does it also sort of imply that basically apart from crankshafts, um, um, is there anything else also which you're supplying to them?
So crankshafts for us is around 45% of our total business. But for
Hmm.
this sector, for farm equipment, we are a major source of suppliers of crankshafts to this sector. We also do a lot of transmission components for
Okay.
this sector as well, and also to customers like JCB in off highway.
Right, and that also implies there will be a lot of sort of dedicated capacities. What's the total capacity right now, and sort of where do we stand at the utilization?
So for last financial year, it was combined capacity for forgings and machinings of 1,56,000 tons, which in fact increased to 1,67,000 in H1, and including forging and machining for us. But most of the capacities for us, whether in forging or machining, are totally highly fungible. So we can utilize the capacities, the capacities which are there for farm equipment, even on the CV side, and we can use it on the off highway side as well. So most of the capex for us is new. So for 50% of the block is kind of built in the last 4 years. So with the type of capex we have done, it's all with the latest equipments and the most modern facilities where the lines can be interchangeable. We can do the entire setup changeover within few hours.
Oh, that's very interesting. And while actually almost 6% or 7% sort of new commissioning has happened in the first half of this year, where do we stand at the blended utilization level?
So on in terms of blended utilization level, in terms of machining, we are at around 80 to 85%, ranging between 80
Okay.
to 85%. On the forging
Okay.
side, we are at around 70 to 72%. And we are
Okay.
also bringing in more capacity by end of this year. So and the
Uh-huh.
same time, we are also looking at the ramp up of these capacities. So it'll be the capacities will be range bound with the type of capex is ongoing for us.
That's very interesting. And all these capacities are there around Ludhiana itself, or you have them at other facilities also?
So we have three units in Ludhiana spread across 72 acres and almost 24 lakh square feet of built up area. So all are in Ludhiana currently.
Okay, very nice. Almost integrated sort of thing. And
Yes.
so how much sort of funds you are looking to raise from this IPO, sir, and how much that is going to the company?
So we're looking at raising 1,000 crores, out of which 400 crores is primary fund infusion within the company, and will be further used for further set of growth.
Okay, and with this 400 crores, what's the sort of planned usage and like how much time over how much time is going to get deployed?
So we are looking at in terms of fund requirement. So around 150 crores will be used as a repayment of or prepayment of debt, and the balance will be used for the new capex. And in addition to this, company generates over 300 crores of cash currently, and that will also be utilized in terms of capex. In addition to this.
So I'm back calculating 550 crores, 500 to 550 crores of capex, which implies new facilities are going to get created. In your sector, so what's the average turn? Like two times, three times?
So for us, it's a business which is very high in ROCE and high in margin. So for us, asset turns are low. It's around 1.2, 1.3 max.
Okay, 1.2, 1.3 max. And yes, that's true actually. For our viewers should also take note of that. In auto business, auto ancillaries, they make far higher ROCE, return capital employed, return equity versus the OEMs, and that is a universal global factor. From the perspective of coming back to asset turns, so about 500 to 550 crores of investment if it is going to facilities, one can average expect around new 500, 600 crore revenue turnover. But then the question comes, sir, is that the capacities must be brownfield. Are these brownfield sort of adjacent to your existing facilities, or they are getting constructed into a new greenfield facility?
Most of these are brownfield, for which we already have the power and surplus land available. So there is kind of very little investment in terms of infrastructure and more investment towards the machinery.
Then asset return will be higher on this fresh new investment because
Yeah,
you
it will
don't
be
have to
asset.
invest in shed, in land, in the
Yes,
wiring.
yes, asset terms will be slightly higher than what it was historically, because we have already invested into infra for this capex.
Right. And like, what is sort of your own expected by your own experience, sort of commissioning schedule going to look like? Because if it's only about machining, apart from some basic infra, but it's only about machining, then perhaps commissioning is going to be faster.
So we are say I'll talk from a 3-year perspective. We are
Sure.
looking at say over 1,000 crores of capex, which is lined up in the next say around 24 to 30 months for us. And with the type of cash company you'll be seeing in, it's all gonna deploy organically for us.
Oh, very nice. So basically, a phased commissioning schedule over the next 3 years, and this sounds good. What was for the benefit of our viewers? What was the last year revenue?
So last year we've clocked almost 1,200 crores of revenue.
Right, and this is important. So 200 crore revenue clock last year, and if we are actually looking to sort of do a massive capex of almost 1,000 crores over the next 3 years, we actually are talking about, and this is not about forecasting, but only about capex related. We're almost talking about a sort of a big sort of surge, or I would say a big step up from where the company is operating right now. Is that something I'm thinking in the right direction?
Yes, you're looking at right direction. We have already grown from 560 crores of revenue in the last 3 years to almost 1,200 crores, completing 676 crores in H1 of this year. So going forward, we see that we'll be able to maintain this trajectory going forward as well.
Okay, so 1,200 crores already, and then we are looking for 1,000 crore capex. So our company definitely is looking for a solid growth here. And given the fact, sort of, let's talk about now about the business model. We already know what you're producing, where you're selling. Um, about from the perspective of raw materials, what actually is a moving part here for you?
So raw material is sourced, from some of the players like Tata, GSW, Nico Jaiswal, which is which is a billet for us, which is carbon as well as alloy steels, and further it is manufactured. And since 40% of our business comes from auto and 60% from non-auto. Within auto, we supply to SUV sector and commercial vehicles, and in non-automotive, we supply to farm equipment sector, off highway capital equipments like JCB, Caterpillar, and then to industrial business, majorly catering to wind power and heavy gensets. So this is the range that we do, and our products are fully machined. 85% of our products are completely built into products, which is highest amongst the listed peers in terms of in our domain, and it's supplied as a complete product, not as forged to these industries.
Okay. And from the perspective of contracts, are these contracts long-term contracts? Are these contracts fixed price contracts, or they basically have price pass-through mechanism also built into it?
So these are all long-term contracts. The gestation period to launch these projects are it's around 2 to 3 years, and OEMs just spend a lot of money for R&D and testing. We are typically talking about the products that ranges between 30 kg to 200 kg, and the application of these products are pretty large. So the investment spend on R&D is huge. So the typical period that the ramp-up activity starts at between 3 to 5 years. So if you see top 10 clients for us, the relationship is between 11 to 21 years old, and most of these projects are long term, and it depends. The share of business is allocated, and it depends on the build of these of this production which is happening in each domain. So this is how it is built for us. I'm I hope I answered. I think you asked something in the
One
end.
one small part,
Yes.
which is on the pricing part. I was asking you from an interest
Yes.
perspective that right now commodity prices are cooling off. Last 18 months have been slightly tough because there was a lot of volatility, price movements were going up. Now they are cooling off. So usually in your business, there is a price pass-through mechanism which is built into. How it works for you? Like, are you able to pass through the raw material price changes, or there is some sort of absorption which has to be done?
So for us, steel price is a complete pass through with a lag of 1 month in a domestic industry, and even in
Okay.
exports is a pass through mechanism with a lag of 1 quarter. So we normally are not getting affected with any changes in steel prices. And if you see over the last 5 years, our margins has been consistent. We're able to
Hmm.
deliver 27% EBITDA margin on an average basis in the last 5 years, including COVID year. So you can see how consistent our margins have been. And
That's very good.
going forward with the steel prices dipping slightly, we see the margin expansion going forward as well for us.
Okay, that's interesting. Perhaps last few on the export side, what's the sort of split between domestic revenue and export revenue right now?
So for us, on a H1 basis, we have clocked 21% as direct exports and 11% as indirect exports for us. But in the last 4 years, the export business has kind of grown by almost 5x, from 60 crores to almost 300 crores that we'll be completing this year. So, and the type of business we have in pipeline, the new project, 60% of that business comes from exports. So
Hmm.
exports going forward will definitely grow to a decent level of around 28-30% in next 18 to 20 months.
Okay. Any sort of exposure or your products getting exposure into the electric vehicle stream? Any thoughts on that?
So as already explained, 60% is non-auto for us, and 40%
Hmm.
is auto, where we are majorly into long haulage sector. In a
Hmm.
long haulage sector, we are already working, on the new developments on the side of hydrogen combustion engines. And
Hmm.
globally, if you see, Cummins is debuting their hydrogen combustion engine. They have already debuted in the Auto Expo, and by
Hmm.
2027, they are going to productionize this in US. And Ashok Leyland, they have already collaborated with the Reliance on hydrogen combustion engine, where
Yes.
Reliance will be dispersing the complete green hydrogen for this, and they plan to convert almost 45,000 trucks on annual basis on hydrogen combustion engine. So as far as long haulage is concerned, we are pretty clear that hydrogen combustion will take the future. And as well as in the case of some of our customers like JCB, we are seeing that they have launched the entire fleet on hydrogen combustion range, where we have no threat at all. and our products are already going in the CNG application. Only area that we see, some application, some bit coming in is electric buses, which is hardly 1.5-2% of our business. And over there as well, we have developed electric axles for Tata Motors.
Okay, that's good to know. That's good to know. So that perhaps is something I think which our viewers will take note of. But largely, this is a business which has sticky customers, long-term business profiles, pretty much diversified business profile, and also a strong return profile. And the most important part, I think, which perhaps our viewers will take note of, there is a large sort of capex program which is underway, and that is something which I think all investors really love about. But Ashishji, it was a pleasure having you on the show, and we
Thank you.
wish you all the well for a great listed journey, and hope to stay connected with you when the next time you announce the results.
Thank you so much.
And dear viewers, hope you enjoyed this show. For now, it's a wrap on the show.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.